You will see the precious metals move as a consequence of the fear buyer coming into the gold market. After the gold is moved, after momentum has been established by the fear buyer, if past is prologue, you will see silver move further and much, much faster. All I can say about when is you'll know it when it happens.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. Hey there, my friend. Welcome back to Silver News Daily, and have I got some exhilarating updates for you today. So get comfy, because you're going to want to hear this. Gold and silver, our two favorite metals, have been making some remarkable moves lately, especially right here in the UK. Remember those prices from March, before that banking crisis ignited the latest rally? Well, gold has been dancing with those numbers again. Just last week, gold flirted with a price of $1,885.40 an ounce. And guess what? Thanks to all those astute investors who knew when to buy on the dip, this morning, our golden friend vaulted over the $1,900 mark. And let's not even start on its performance in GBP. Just over a week ago, it took a slight dip below 1,500 pounds, but hold onto your seats because it surged back above that, climbing over 1% in just the past day. But hey, if you thought that was impressive, silver's comeback story is even more thrilling. It's bolted up by more than 5% in pounds this past week. We saw it touch down to 17.56 pounds an ounce a week ago, but now it's confidently trading at 18.77 pounds. I can almost see that grin on your face. Now, of course, the financial world isn't just about precious metals, right? We've got to understand the broader context. This morning, we got some fresh data on UK's PMI figures, and well, it's looking a tad bleak for UK manufacturing. Both the services and manufacturing sectors seem to have stumbled a bit, perhaps influenced by the sky-high UK interest rates. But don't you worry, even when there's a storm, there's a silver lining. As the pound takes a bit of a dip, it's given our beloved metals, especially when priced in GBP, quite the boost. I'm excited to tell you more about that. And oh, before we move on, have you heard about what's happening over in the Eurozone? Well, keep listening because it's all intertwined and is setting up quite the scene for the rest of our conversation today. Things are heating up, and I promise by the end of this, you'll be looking at your gold and silver investments with a whole new perspective. Stay with me, all right? Let's dive deeper. Okay, my friend, let's keep the ball rolling. Let's venture across the pond and see what's been stirring in the markets. So remember when I said the world of precious metals doesn't exist in a vacuum? Well, global events can influence the price dynamics of gold and silver, and the Eurozone's recent PMI figures are a testament to that. The Eurozone has been facing some challenges similar to our own. Both their services and manufacturing sectors have shown signs of contraction, mirroring what's happening here in the UK. Can you believe that their services have slumped to their lowest since November 2020? Time sure flies, and the markets do keep us on our toes. Now, here's something fascinating. All these economic tremors have impacted currencies. The pound, for instance, has been on a roller coaster, losing more than a cent against the dollar today alone. Yesterday, it was confidently standing at $1.27989, but today it's descended to about $1.26419. These shifts might sound minute, but in the grand scheme of things, they are monumental. And when you think about the broader implications, like the UK's ability to steer clear of a recession by year's end, it all starts to paint a rather intricate picture. But, as always, where there's uncertainty, there's opportunity. Many countries have been navigating these tumultuous economic seas with rising interest rates, hoping for a smooth landing, but the recent months, they've revealed some vulnerabilities in several economies, including, and brace yourself, China. I've got more to spill on that later. But I can't spill all the beans just yet. Just remember, my friend, every cloud has a silver lining, and sometimes that silver lining can be literal. As we inch closer to wrapping up 2023, there are whisperings that events across the globe could further boost the allure of gold and silver. But as promised, we're going to delve into that juicy bit in a little while. Keep those ears perked up. The story unfolds. So, moving right along, let's talk about global powerhouses, shall we? China. The mighty dragon that's been a focal point of global economic discussions for as long as we can remember. Recent months have exposed some chinks in their armor. There's a lot bubbling up on that side, and it's crucial we keep our eyes on it, not just for global politics, but for our dear gold and silver. China is currently facing a deflationary period. Yep, you heard me right. Then there's the property bubble that seems to be on the brink of bursting. Now mix in a debt crisis, a weakening currency, and surging unemployment rates, and you've got a cocktail that's making investors everywhere sit up and take notice. Why does this matter to us, you ask? Well, economic fluctuations in a giant like China can cause ripples, or more like tidal waves, across the global markets. When economies face such challenges, there's a historical trend of investors flocking towards safe haven assets. And if history has taught us anything, it's that gold and silver often wear the crown of the most sought-after sanctuaries in troubled times. Speaking of troubled times, remember when I mentioned the looming recession shadows in some parts of the world? Well, the UK and EU are notably feeling the pressure. It seems they were a tad slower to hike rates compared to the US. And the result? The threat of a recession is becoming more palpable. Some countries, like Germany, might already be feeling the pinch. But wait, there's a twist. The US, our big brother across the Atlantic, seems to be showing resilience against these higher rates. Oh, it's going to be a gripping end to this year, seeing how things pan out. And you best believe this will have repercussions on our shiny metal friends. But how? More on that soon. Now let's cross the pond again and shine the spotlight on our dear Uncle Sam. The US, in its characteristic fashion, seems to be defying many expectations. Despite the upheavals elsewhere, they've held firm so far. But the real question on everyone's lips is, can the US land this plane smoothly? After nearly 2 years of soaring interest rates, there was hope. The dream of a soft landing in many countries. However, recent events have hinted at cracks forming in several economies. Everyone's watching closely. If the US navigates these rough waters without capsizing, it would be a massive win for the Federal Reserve. But if the US starts reflecting the downturn that other countries are grappling with, well, my fellow enthusiasts, that's where things could get very, very interesting for gold and silver. Now, I'm sure some of you are probably thinking, what's the silver lining here? See what I did there? But in all seriousness, if countries start diving into recessions and the US follows suit, it could be a launch pad for gold and silver. Think about it. The final quarter of 2023 could see a rally like we've never seen before. But the plot thickens. We've heard rumors and whispers in the wind about potential supply chain issues looming on the horizon for gold and silver. Oh, and it's not just about the skyrocketing demand. We're talking transport, extraction, you name it. If these forecasts ring true, we could see gold and silver prices skyrocket by up to 40% by the spring of 2024. Can you imagine? Being part of that rise could make many savvy investors dance with joy. All right, I'm holding back a bit. There's even more that you'll want to hear about. Stay with me, you won't regret it. Speaking of dancing with joy, let's chat about the recent roller coaster we've seen this September. As we often witnessed, September brings about its own volatility in the money markets. 2023 is proving to be no exception. Just a short while ago, gold and silver were enjoying a nice sunny spell, racking up solid gains. But as with any British summer, there was an abrupt halt. The US threw in a curveball with stronger than expected job and manufacturing numbers. Oh, the US economy and its surprises. Peaking at an impressive $1,953 per ounce, gold took a slight dip, coming down by 1.8% to $1,918. And silver, well, after enjoying a high of $25.37, it saw a sharper drop, settling at $23.08. Now, I know what you're thinking. Why are we seeing these fluctuations? It's a dance of numbers, my friends. With the ongoing strength of the US economy, there's heaps of speculation on future interest rate hikes. Everyone's got their eyes on the Federal Reserve's next move. Now, volatility isn't always a bad thing. These price swings might present golden opportunities for savvy investors to buy, especially if they're prepping for the next big rise in metal prices. And trust me, the signs are there. In the upcoming weeks, there are some crucial markers to watch. These can impact not just financial markets, but more importantly for us, the precious metal prices. Together, they could bring about the price volatility we're all eagerly waiting for. Do I have your attention? Good, because the upcoming sections are not to be missed. We've got more nuggets of information to share. As we wrap up today's session, let's revisit some of our golden highlights and delve a bit more into the heart of the matter, the price of gold. The journey of gold and silver has been nothing short of a roller coaster. From their significant bounce back in prices both in the US and the UK to the resilience shown against market fluctuations. Remember when gold sneaked past 1,500 pounds in the UK? Or when silver showcased a commendable recovery? With the current global economic landscape, it's not too far-fetched to believe that gold could be on its way to a meteoric rise. Between the US dollar index, UK's economic uncertainties, and China's economic challenges, the foundation is being laid for gold and silver to potentially shine even brighter. Now here's where it gets interesting. With all the information and patterns we've been seeing, I'm going to make a bold claim. It's entirely plausible we might see gold hitting $10,000 per ounce in the foreseeable future. Before you fall off your chair, hear me out. With economies worldwide showing cracks from China's deflation and property bubble concerns, uncertainties in UK and EU interest rate movements, there's a massive window of opportunity for gold to capitalize on these economic vulnerabilities. Historically, whenever there's been economic uncertainty, gold has always been the safe haven. Add to that potential supply chain issues which might come into play, increasing the demand-supply gap, and you've got the perfect storm for skyrocketing gold prices. But, as always, while it's exhilarating to make such predictions and observations, let's stay grounded. This is all news, my friends, not investment advice. Always make sure to do your own research and be informed before making any financial decisions. Oh, and speaking of gold, do you know why the gold bar was always calm? Because it had the Midas touch. If you're curious to explore more such golden tidbits, don't forget to check out another one of our insightful videos right here on Silver News Daily. Stay golden and remember to shine bright, dear listeners. Until next time.